Bloomberg Audio Studios.
Podcasts, radio, news.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Jess Menton, she's sitting in for Alex Steele. Today, I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well, so you can check us out there. Bloomberg, go to youtube.com and search Bloomberg Live Radio, Bloomberg Podcast, any which way we'll get you there. And we will have continuing coverage throughout the rest of the morning on the escalating tensions in the Mideast and the impact they're having on the markets. The other major story, obviously, out there is the day one of the port strike here on the East Coast. I was looking at some graphics on various TV networks, and it's pretty much all down the entire East Coast, winding around our friends in Florida and all the way into the Gulf Coast. You start thinking about, that's a lot of territory there. That's a lot of shipping. So you really want to get some perspective on that. You go to the folks on the left side of this country, on the West Coast. They had their labor issues a couple of years ago. Mario Cordero joins us, CEO of the Port of Long Beach. Mario, thanks so much for joining us here. What role do you believe the West Coast ports, your port in Long Beach, can have in maybe relieving some of the pressure on shippers who can't unload or load their goods on the East Coast? How are you guys approaching that?
Well, thank you for the invitation. I think when you talk about Long Beach, we're part of the largest container gateway for the nation. So I think the role that we play is a continued role that we move a great percentage of the nation's trade. And I think we're in a very good position to handle whatever surge comes our way. And last, I'll make the point that August, we had a historic number of containers moving through the Port of Long Beach. That number was 913,000 plus containers. That's a historical high number for us, a record number. And when you add the Port of LA for August, we approximate about 1.9 million containers in this gateway, the San Pedro Bay complex. So our role here is to continue to move cargo in an efficient manner. And again, Port of Long Beach has a tremendous capacity right now. In other words, good capacity, around 70%. So we are prepared to continue to move that containerized cargo that comes our way.
I'm curious, what kind of lessons did you end up learning from the pandemic, because we had so many supply-related issues with the chains there, and how could that help you try to navigate this instance?
Great question. A lot of lessons learned. Number one, expanding operation hours. I've been a big spokesperson for 24/7 operations. Again, to qualify that or put that in perspective, we're not going to go 24 hours a day, 7 days a week anytime soon, but there's a framework of expansion of hours. So in Long Beach, we've done that. We've done staging areas. And again, this is going to be very beneficial for us if, in fact, we need to stage containers outside the terminals. And I think the lessons learned from COVID, again, it's a supply chain issue. So the warehouse that is the end product here of the supply chain in this region, they also are very collaborative with us in making sure that inventory moves. So again, a lot of lessons learned from COVID-19 supply chain crisis. So we're applying those lessons, and hopefully, again, as I just noted, we're moving a record amount of cargo here at the Port of Long Beach without any congestion or bottlenecks whatsoever.
Hey, Mario, if I'm a shipper, I've got a ship at sea in the Atlantic steaming towards New York or something, and that's closed now. What are the economics for me to say, I'll go to the Panama Canal, go through there, then I'll come up to your port in Long Beach? Is that realistic? Is that a decision option?
Well, that decision for the shipper is based on economics. So obviously, if they're going to come to the West Coast, I think that decision comes into play that for them, it's a reduced cost with regard to the option that potentially could happen. But in that regard, yes, there's increased transportation costs for sure. But I think it's going to be a scenario in which we'll be able to manage that and move forward as we have in previous instances. We talked about COVID-19. But again, we have a lot of lessons learned from COVID-19. And one of them is we are prepared no matter where the options are in terms of cargo flow. We're going to be moving the cargo here.
What other ports along the West Coast do you foresee field cargo that ends up getting rerouted?
I'm sorry, repeat that question.
So what other ports along the West Coast do you foresee other sort of field cargo end up getting rerouted at this point?
Well, number one, Port of Los Angeles. Again, they're part of this gateway, the Port of Oakland in Northern California, and you also have the Port of Wainimi. So there's other ports in the West Coast here. And again, if you go to the Northwest, Port of Seattle and Tacoma. So I think the West Coast is in a very good position to make sure that we not only receive the cargo, but continue to move it inland to the nation's Midwest.
Mario, one of the topics that I guess the longshoremen and the shippers have is wages, of course, and presumably that'll work itself out. But the other one is automation and what that means for jobs. How do you guys talk to your longshoremen about the need for you guys to automate to remain competitive versus their need to preserve jobs? What's that discussion like these days?
Well, I mean, you mentioned an issue here. Automation, robotics has been a continued concern in all sectors of labor. So for the Port of Long Beach, I think the way we've been able to navigate well with our labor partners is anyone who's interested in further developing the terminals at the Port of Long Beach, number one, you have to have a meeting of the minds with the IOW. So that collaborative partnership and works well for us. So in that regard, that's been our policy. Anybody who wants to expand or develop their terminals, they have to go through the IOW first. And that mitigates any serious differences as we go down the road. So for us, it's been a successful path. But on the other hand, again, keep in mind, this is an issue across the board in terms of workforce in the nation, if not the global community.
Do you have a sense from retailers how they're potentially making contingency plans as of now?
Well, I think what I can tell you is I gave you these record numbers that we're moving here at the Port of Long Beach. You know, for August, that's almost a 34% increase year to year. So I think the retailers and the shippers have already anticipated a scenario that's occurring at the East Coast, and they've already made that decision to move their cargo to the West Coast. And again, the August numbers for both these ports, Los Angeles and Long Beach here in the San Pedro Bay complex, are historical numbers. So that basically answers the question that I think they've already made those decisions, and I do expect to have additional cargo. But having said all this, I want to make sure that, again, from the Port of Long Beach, we encourage that the parties in the East Coast move to a resolution, because any bottleneck in the supply chain in the nation is not good. So from my perspective, I think, again, it's not about additional cargo that we're going to get. It's about hopefully these parties come to a mutual resolution soon so that we don't impact the nation's supply chain anywhere in the country.
Hey, Mario, thank you so much for joining us. Really appreciate getting some of your time. Mario Cordero, he's the CEO of the Port of Long Beach, giving us a sense of kind of they're busy.
Right.
And presumably they still have some capacity to take some shipments if somebody wanted to divert them from the East Coast to the West Coast. And the other thing we learned about talking to Gene Soroka, who is his counterpart at the Port of L.A., is that those West Coast ports, particularly the ones in the L.A. area, they just get a great view of China trade. You know,
They do.
those container ships just keep coming back and forth into that port, so you can get a good view.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Tensions and conflicts in the Middle East return to Mick Mulroy. He's a co-founder of the Lobo Institute, but that's just the beginning. He's a former senior fellow at the Middle East Institute, former Deputy Assistant Secretary of Defense for the Middle East at the U.S. Department of Defense. That wasn't enough. Former paramilitary operations officer at CIA, and of course, a former U.S. Marine infantry officer. And for his service, we say thank you very much, Mick, for your service. Mick, it looks like we're going to take another rung up on the escalation ladder today. What do you make of this news that the U.S. is saying that Iran is preparing to hit Israel with ballistic missiles?
Good to be with you guys. I think this is expected, of course. They've been claiming they're going to retaliate ever since we saw the assassination of the Hamas leader in Tehran. Then, of course, the assassination of the Hezbollah leader in Beirut, and it was expected. Now, the question is it going to be like April, where we have the capacity, and we do have the capacity, to essentially shoot down all of the incoming drones and missiles? Or is it going to be more substantial? Or is it going to be coordinated with Hezbollah and the Houthis so that it can try to overwhelm the defenses of Israel and the United States combined? That's the question we'll see soon, because it looks like it's imminent, and it's going to take some of these projectiles hours to get to Israel. So we have to stand by and see how this goes.
To what extent does the United States rely on Israeli intelligence streams in its assessment of those different regional threats?
So there's a back and forth when it comes to the Israeli-U.S. intelligence cooperation. Oftentimes, Israel has better intelligence on the threats that are immediate to them. Of course, the United States also has its independent intelligence. And when it comes to big regional intelligence, usually the U.S., the CIA, and other organizations inside the intelligence community are better in passing information to Israel. For example, the IDF spokesman said that the U.S. had notified Israel that Iran was preparing these cruise ballistic missiles and potentially drones earlier this morning. So that shows the cooperation and the sharing that goes on near constantly.
Mick, immediately following the October attack on Israel, Prime Minister Netanyahu said quite simply that the strategy, the goal of Israel is to, one, eliminate Hamas, and two, get the hostages back. That seems to have broadened out significantly the scope to now taking on Hezbollah and going into Lebanon, dealing with all and any adversaries. Is that in fact true? Has his war aims broadened significantly?
Well, I do think it's broadened, but I would have to say if somebody spends quite a bit of time in Israel, the Israelis have been messaging directly that they knew that this war in the north between Hezbollah would have to happen if they were to get their 60,000 plus citizens back to their homes in northern Israel. They were very clear about that. And I think it's important to point out, Hezbollah has been attacking Israel since October 8th. There's been over 9,000 missiles, rockets, drones, and anti-tank weapons fired into Israel. And this was inevitable if this was going to continue. And I think they have shown that they have very good capabilities in Lebanon. I don't think it's in anybody's interest, including Israel, but certainly not Lebanon's, for this to turn into a full-scale ground invasion. But from Israel's perspective, this was inevitable if Hezbollah was going to continue to attack their northern settlements and essentially put at least 1/3 of their country off limits to their own citizens.
With the conflicts between Israel and Hezbollah inevitably drawing in Iran into the conflict, what does that mean for the wider region in general now?
So that was the biggest concern of the United States. That's why we've had so many military assets in the region to try to deter, of course, and to a certain extent it has deterred Iran, I believe, and then also to defend. And we've seen how capable the U.S. was when it came to defending Israel, along with Israel and other countries in the region, such as Jordan, which defended Israel against the April 13th attack by Iran. But this is what the biggest concern is for the United States, that Iran would mount something that wasn't manageable, that wasn't for show, that was, or actually just got through and caused substantial damage or loss of life in Israel. Because I think it's been clear that Israel will respond directly to Iran, and they might take direct, meaningful strikes, not like they did last time in Iran. In fact, several of the IDF spokesperson have referenced their recent attack on the Houthis in Hudaydah, Yemen, is further away from Israel than Iran's oil fields, specifically citing Iran's oil fields. So I think there's a lot of messaging coming out of Israel right now that if Iran is successful, so not for show like many in it believe April was, and actually causes damage, that this could escalate very quickly and have impacts that go beyond the two countries and certainly beyond the region.
Mick, we've seen the U.S. government repeatedly call for restraint on the part of Israel, yet Prime Minister Netanyahu has effectively ignored those pleas here. What is the current state of the U.S.-Israeli, relationship?
Well, I certainly think there is some tensions. I mean, the U.S. overall supports Israel defeating Hamas, of course. They were the terrorist attack that attacked them on October 7th, and Hezbollah, which is a U.S. designated terrorist organization and has been constantly attacking Israel. When it comes to the relationship in Gaza, I think there's been differences of how that was prosecuted. And now I think the U.S. just wants to see this get contained and have a ceasefire so that they can do everything that they would like to see policy-wise, which is in the conflict in both Gaza and obviously not have one, if you will, in Lebanon. But Israel has their own interests. They're their own sovereign country, and they make their own decisions. If they were asking me, I would suggest to the White House that they take more of a behind-the-scenes role and not have public disagreements with Israel. They could certainly have private disagreements with Israel when it comes to this ceasefire, because in Lebanon specifically, because this is very difficult for any country to tell another country that's been attacked, again, 9,000 missiles in less than 1 year, not to do something that they know they would do. So that makes this a bit different. And essentially, the ceasefire needs to come from Hezbollah, who could simply stop attacking Israel, agree not to continue, potentially move to the Litani River, which is required by a UN resolution. So most of the, I think, negotiations on this side should be focused on Hezbollah vice Israel, which most countries, I think, if put in the same situation, would be doing something similar to Israel right now.
All right, Mick, thank you so much. As always, really appreciate getting some of your time and your perspective. Mick Mulroy, he's a co-founder of the Lobo Institute and really one of our expert voices that we rely upon whenever there's some of these geopolitical tensions, particularly in the Middle East, where he has so much experience.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Geopolitical story of the day, moving markets, is U.S. is saying that Iran is preparing to hit Israel with ballistic missiles, and we've been covering that story all day. We will continue to do so. Jonathan Panikoff, he joins us now. He's the director of the Scowcroft Middle East Security Institute at the Atlantic Council. He is based in Washington, D.C. Jonathan, thanks so much for joining us here. What do you make of the last, 48 hours in the Middle East, with Israel having some troop incursions into southern Lebanon, and now the news today that the U.S. says that Iran may be preparing to hit Israel with the ballistic missiles? That's been quite the escalation in the last 48 hours. What do you make of it?
Thanks for having me. It certainly has been the escalation. I don't expect it to end anytime soon. I think the Iran strike that is probably going to be coming shortly here is going to look slightly different than April. I think certainly it's still going to probably target first military assets in Israel, intelligence headquarters perhaps. I don't think they're going to see the Iranians go after civilian infrastructure. But I do think the question is going to be, how does Israel respond? And I'm skeptical that you'll see the same response that you had in April. And then that means that the chances for increased escalation as we go up the escalatory ladder are only going to go up. So this is going to take a little bit of time to see where it resolves. And of course, at the end of it, you still have what will be an ongoing war between Israel and Hezbollah.
Has the UN Security Council had a reaction yet to the latest news on this?
The Secretary General did come out and say every effort has to be made to try to prevent a full-scale war between Israel and Hezbollah that could engulf the region, but we haven't seen the UN Security Council immediately this morning meet. My sense is you'll see them meet as soon as, frankly, Iran launches and you start to see more kinetic action being taken. But the reality is going to be the impact of the UNSC is going to be, if anything, very minimal.
Jonathan, I guess maybe with a little bit of hindsight, we should not have been too surprised that we've had this escalation here, because you think about just last week, Prime Minister Netanyahu at the United Nations here in New York, pretty defiant speech there. Is he emboldened now to do more than maybe what the initial aims were, which is to get the hostages back and take out Hamas? Are his aims much broader now?
They certainly are. And look, I think Israel's been split for quite a while. There were some at the beginning of the war, including Yoav Gallant, the Israeli defense minister, who said, no, we can actually deal with Hamas at a later time. We should go after Hezbollah. And that was in late October of 2023. That's not the direction that Netanyahu chose to go. It's not the direction most security officials chose to go. But it also didn't resolve the fundamental challenge that you had Hezbollah beginning October 8th begin rocket attacks into northern Israel that has displaced tens of thousands of Israeli citizens who Netanyahu has now faced political pressure to return them home. It's now been a year. The original promise was to restart at the beginning of the school year. That didn't happen. And so now I think the view is, and we've seen this the last few months, Israel very methodically went after Hezbollah's command and control, its leadership. It took out more Hezbollah leaders in the last 2 months than it had in the last 2 decades. And so clearly there's a concern that this is going to escalate, and it probably will. But you're right. Some of this has been telegraphed in the last few months about the direction we were heading.
What types of weapons could Iran use in an attack, and would they use all of their military capabilities for one?
Yeah, I think so. Look, Iran has a really large inventory of ballistic missiles, of cruise missiles, of drones. You're talking about dozens of different types with significant ranges. The ballistic missiles, the time to get them from Iran to Israel is about 12 minutes, give or take. So it's really quick. The cruise missiles are a little slower, the drones much lower than that. But the reality is, at the end of the day, Iran's number one concern is always regime stability and regime security. And so the odds that it's going to use the entirety of its arsenal, I think, is very, very low. Because if it does so, then it's got nothing left to protect itself or even to protect Hezbollah in another month or two if there's a need, that if Hezbollah looks like it's really suffering. The question for Iran is going to be, how does it respond in a meaningful way that can try to create some increased deterrence against Israel without actually leading to a full-scale war that jeopardizes the stability of the Iranian regime? And that's going to be a really hard balance to meet.
All right, Jonathan, thank you so much for joining us. Really appreciate it. Jonathan Panikoff. He's a director at the Scowcroft Middle East Security Initiative at the Atlantic Council, giving us the latest on the geopolitical tensions rising there in the Mideast.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
Economic data also coming out impacting these markets. ISM Manufacturing, as John Tucker just reported, came in at 47.2. The consensus was 47.5, so a little bit light, but kind of flat with last month. Let's break it down a little bit. We can do that with Tim Fiore. He's the chair for the Institute for Supply Management's Manufacturing Business Survey Committee. Tim, what do you make of the data we saw here from the U.S. manufacturers today?
Good morning. So we have a stable contraction compared to the prior month at 47.2, like you said, Paul. It's a good report. I think on the demand side, we're still looking for demand to surface. And of course, our panelists only had a little bit of the benefit here of the federal rate reduction announced several weeks ago, but it's not reflected really in our report, just the sentiment would be. On the output side, output was good. Our revenue and our production base was stable month to month, which is excellent. Employment stepped down again. We could talk a little bit more about that. And on the input side, we returned to a normal minimal stress on the supplier side, and manufacturing inventories back in the level that you would expect them to be. So we're kind of where we thought we would be, in the a little bit above 47. We're still thinking that we're probably going to stay below 50 before we get to the beginning of next year. But so we'll talk a little bit about employment and prices. So we've kind of been preceding what's been happening on the jobs, JOLTS, CPI, and PPI in terms of direction. Our employment came down again pretty strongly, but I think the fact that the revenue maintained this level that we had back in August indicates that we're just trying to make sure that we have employment levels aligned properly with the latest demand forecasts. Then on the prices side, we came down to 48.3. We're easing a little bit. We've seen some softness on steel and aluminum, more of the foundational commodities. And I think that's probably a good omen for the CPI, PPI, PCE that comes out later on in the month.
So, Tim, we know that previously declining orders had been that issue and a persistent retreat in the backlogs that had remained kind of key headwinds here for production. Where are new orders increasing versus decreasing?
So demand overall, I think, is still negative this month. We have very weak new export orders. The new order level contracted again, but not quite as bad as it did in the prior month. We contracted minimally, but we're still contracting. Our backlog gained a little bit in terms of slowing down its contraction, but it's still contracting fairly heavily. Overall, and customer inventories came in about right, which really isn't all that good for next month's activity. So overall, demand is still weak. Wouldn't expect with the Fed announcing an interest rate reduction just a couple of weeks ago that we would see an impact on the demand side. I'm hoping to see additional investments start to occur in the November timeframe. Maybe that will help as we build up maybe manufacturing inventory to do better on customer demand.
Right.
But overall, I really don't see demand coming back until we close the year and the election gets behind us.
All right, Tim, thanks so much for joining us. Really appreciate you breaking down this news here. Tim Fiore, chairman of the Manufacturing Business Survey. The firm is the Institute for Supply Management, breaking down some of those numbers. It came in a little lighter than expected, but a little stable relative to last period. Still in a contraction mode.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
All right, Boeing, some news here. Maybe weighing to raise at least $10 billion in stock. Because why? They got a cash flow problem here. And they're not delivering as many planes as they need to. It's definitely a challenge for them. So they did go to the bond market, and they're considering going to the equity market. Let's see if that's enough. George Ferguson, Senior Aerospace Defense Analyst for Bloomberg Intelligence, joins us. George, again, this is something you've talked to us about in the past, that the company may need to go to the equity market and raise some equity. The stock's down 40% year to date. Ideally, not a good time to raise money at this valuation. But what do you make of this?
Yeah, I mean, I think the strike is sort of dragged on enough, and they have to be concerned about having enough cash to continue to run the business that they're ready to do whatever it takes, right, to shore up their position. I guess it kind of gives me a sense that maybe they think the strike's going to last longer than maybe even we anticipated originally, and so you got to do what you got to do, I guess.
And we do know that Boeing is on the cusp of seeing its credit rating cut to junk here. What's the likelihood that we could see this happening soon?
I mean, I think that, again, if this strike drags on, you're starting to get to the point where I think once you get past a month where you're probably doing more damage to the supply chain. And so losing a month due to the strike, that does. It's going to take you a month to sort of recapture where you were previously. I think losing a month means you put the suppliers in much more strain. Maybe it means it's 6 weeks, 7 weeks worth of recovery. So the further it drags on, I think the more the rating agencies have to think about when are they going to really bounce back to profitability and generate some decent cash. And they've got to keep sort of pushing it out at a multiple of the time the strike has gone on. And so that's what I think the real challenge here. I think I'm not the credit analyst, but I think that the credit agencies, if we drag on again past a month, I think they have to really start to think about whether they can hold Boeing in a band that, frankly, I think they weren't really in anyways. But the credit agencies are trying to look through the cycle a bit here.
The stock's actually up 3.5% on the news today, so maybe that investment-grade credit rating is more important than maybe some dilution here. George, where are we in terms of these negotiations here? We're in week 3. Any movement there? Not what we're hearing. I think you've heard the same as we did, that another offer came out. It looked like I think it was about a 30% increase. Looks like the union wasn't very interested. I think if you're Boeing right now, what I understand is a lot of these union members got one of their last paychecks either at the very end of September or beginning of October here. And so I think now what you're really trying to do is figure out what the reserve, what the union really, how far they're willing to go, right? Whether they're as girded as they say they are to keep going into a world where they're just not getting paychecks, right? And so maybe here we're in a bit of a who knows, sort of the chicken phase where Boeing says, look, we can push this further, and let's see how long you can't take a paycheck and see how much the union has saved up. And I think the challenge here really is, right, Boeing has to live with whatever cost structure they ultimately agree to, right? And so as much as they just want to get back and start building airplanes, they also have to be very careful about what the long-term effects are on their financials. It's really challenging right now for Boeing in their financial position to have to do this, but they've got to think about the long term here. All right, George, thanks very much. We appreciate it. George Ferguson, Senior Aerospace, Defense, and Airlines Analyst for Bloomberg Intelligence.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.